the tariff impacts will incrementalize the tariff impacts. So that by the end of this year, we think the economy is still growing. We don't think the tariffs derail the economy, not from a growth standpoint or from an inflation standpoint. So we'd be looking to buy.
I just want to break in for a moment and say that Paul makes a great point about these are very smart people running the biggest companies, right? And they're going to figure out.
Yes, we are right at the opening bell here. Markets are down.
It's really different to tailor your supply chain. It's really difficult to figure out a way to deal with these tariffs. And we had a great guest on Muddy Issues later in the program to talk to us about those small businesses.
Yeah, I'm very concerned about the small business story, especially because that was a big moment of excitement after the election. People looked at small caps. I actually want to look at the bigger companies still go with you, Paul, because if we can take a note from the micro, tell us something about the macro. You heard from FedEx this morning. Not only is it a bellwether, what it told you was that there's B2B issues, there's industrial companies facing issues based on what FedEx had said. So did it tell you something, or does it tell you something about where we're seeing weakening in the economy at the moment that should be a bellwether into what other problems what we might see ahead?
Well, again, what we're seeing is extrapolation. So tariffs are pretty new. They're pretty, in some cases, still fluid, on again, off again, right? Like in the case of Canada and Mexico. And what we're seeing investors doing is extrapolating into the future and saying, well, these are going to be bad, so therefore we're going to sell the stock today. On the other hand, the other piece of it that we're seeing, or we saw in January, was a very cold month, and a month in which we saw some people already pull their expenditures forward into December from January. And so this extrapolation goes already weak, and tariffs are going to throw it into recession. And again, correlation is not causation. So let's see what happens here. But we're seeing some price increases, but not by the amounts of the tariffs. We're seeing some tariffs that are coming on, and some tariffs that are much. I think that adjustment period.
Equities rallied up yesterday after.
And just as we saw in 2018 and 19, and again in 21 and 22, 20 and 21 with tariffs, we think there will be adjustments made, and that's
good news.
The economy has still plenty of strengths to drive.
Right? I mean, I try to be skeptical.
Shot back down.
I look back at the correction that we've had, and I see pretty much the same thing happened in the summer of last year. Investors are still piling in here.
Wednesday's highs.
Burned, or just buying the dip at 56,
that was our draw
5,700
of yesterday's range.
Sense when the average strategist
target
estimate for
never got there.
The market at year-end is still almost 6,500.
Buying the dips in the middle of a correction, that's always a tricky sort of business. They call it trying to catch a falling knife. But we do see the market trying to stabilize here. The S&P around 5,550 to 5,600. We've seen some
on a premium level here. We're going to short this market.
Some updates with really broad-based momentum across the sector with good volume. And we're already starting to see some of the institutional money come back into the market. So is this the bottom? No, maybe not. We do have triple witching today, so you've got some downside risk there too. But we think fundamentally the economy is still sound. So we would be all the way back up. No sense in risking all the chips and still heading down as part of this correction.
We can point out what triple witching is, right? And it's the expiration of contracts on a whole bunch of different futures. I can never remember, but it's like single stock futures, index futures. What is it, Paul? How is triple witching day as opposed to quadruple witching day?
So you've got futures, you've got indexes, and you've got individual stocks. And all of those come due today. And with all of the volatility in the last couple of months, there's been a huge pile of options that have piled up. And today is the expiry date. So if markets are already jittery, you could expect some more jitters before today is out. But we do take some comfort in seeing some early attempts that we think is stabilization in the market.
And to the point you're making, a lot of people have been looking to the options market from their points of view. Now, one other question I have is going back to the small business part of the story, because you do see the Russell 2000 index that's down more than 8% this year. That is worse than the S&P 500. It's worse than the NASDAQ 100. But you do see an S&P 400 mid-cap index actually doing better than the NASDAQ 100 and the Russell 2000. I'm wondering, to the extent that we want to place to do it, or if you still have some fears that maybe rates are not going to go down as much as we thought, or growth might impact companies or taxes might not be as low as they'd like.
On small caps last fall. And by the way, everyone remember the SOM rule? After that labor market report late last summer, everyone was at that. Yes, small businesses still are on the hook here for interest rates that have not come down by as much as they would like. So that's why last week we made a move in our guidance to go overweight mid caps. If you think about it, mid caps are like large caps, but they're going to hold up better. They're holding up better here in this pullback. And we think, if we're going to have tariff issues where U.S. large companies, mid caps.
We thank you so much for your time. That is Wells Fargo Investment Institute's Paul Christopher. And really quickly here on the whole options aspect, if you're reading the MLive blog, what it'll tell you is, yes, today could be volatile, could be a little scary, especially with the earnings that you're seeing over here. You do have the potential for a further rally in the S&P 500 into month end based on how these options are set up.
No, absolutely. Well, first of all, when we get there next week, you'll see some window dressing at the end of the month. But yeah, also these triple witching or quadruple witching does cause a lot of volatility right around
So we're
1 o'clock.
It looks like we're trying to break out
There's a subtle difference, and that's because
the
if you had
view out
single
here.
stock futures expiring, it would be quadruple to triple witching, but we don't
Yeah, back
trade
bullish.
single stock futures on U.S. indexes anymore,
Buying
so that's
opportunity.
like a thing of the past. You're dating yourself when you talk about quadruple witching.
Yeah, well, there's a whole other thing now that we should one day talk about this.
We look for a buying opportunity.
Losses, and that's despite raising its guidance for the year. It's now down almost 5%, at least nearly 4.7. The Lockheed Martin is higher. Bloomberg reported that the White House will make it the winner of its contract to build the next generation fighter jet. And that we're also watching Lennar because it's struggling. The home builder does pressure.
We wait for a bounce back here.
We're watching
Try to mitigate
it ties in.
this gap. You see the balance here. There it is.
Next generation
We're
fighter
push
jet.
back. Let's just wait to see. It's a bit choppy here. Get to see. Wow.
Coming up, we're going to talk about
Inside
Tesla
there.
is on pace for a 9th straight losses as Trump
Huge rejection to clear this.
This is Bloomberg.
We displaced through here, but we need to get back above the VWAP for us to be bullish, because right now we are still bearish. So let's get.
CIA or NSA have gone to Capitol Hill and said that TikTok hasn't been given that much detailed information. The People's Republic of China acts adversely
Bull push.
to the interests of the United States.
All we need is to displace through these bears
One
here.
of those layers
Displace through the bears, then
disinformation, the
we should be.
intentional of
That should confirm us
statements, and
for
is an extraordinary avenue
for bull conviction.
through which to disseminate.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
These are T2 numbers. Back to the markets, right? Our bread and butter.
Can you one of the best stories in the tech space? That actually matters a whole lot more. It might shock some of your viewers. You're watching the close.
Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Content is everything. Bloomberg brings you
Bear with me a minute here while I change screens.
powered by in more than 100 bureaus across the globe. Bloomberg Television. Context changes
We're
everything.
just going to.
Can you hear the rhythm of the markets? Not just in the
We're going to
secret,
switch this over here. Here we go.
but in the prelude
Back.
leading to global elections.
and the dissonance that moves the Nikkei, and the rise in quartz conducted by AI. Music in the markets. And if you want to learn from
Talk about some of the analyst action. He's also saying that he doesn't see much room for downside for the company. For the
Look at
software
that.
company in the future. We do see Adobe
Could not displace. Another rejection. Right here is probably this is good spot to short here. There. We missed that. Now we're waiting for a wick to be created here. We can get a wick back into this fair value gap. That would be a premium shorting opportunity. Sure can't displace. Well, if the bears can't displace, take out these lows here, then we're just going to be choppy. Just indecision this morning. No clear direction yet.
And protesters with the word that the Attorney General used and bonded as domestic terrorists. For more, we're joined by DJ rating on the stock, a $430 price target. And I mean, without talking about the drama surrounding what do you say, DJ, in like 3 months?
Definitely, it's been brutal. Sales on shipments have been for the first 2 months of the year thus far. Underperformed in China and Europe, especially, and also in the US. So there's definitely some challenges here. Some of it might be a little bit of I think some politicization of the trends there, but that's it. We think they should still have a pretty good second half. There's obviously some headwinds with EU kind of rolling up on the CO2 emissions that they had, CO2 emission guidelines, so that takes out some of the urgency to be shipping out EVs in Europe as well. But yes, Tesla sales have been pretty soft, to say the least, in China and Europe especially. So that's not helping.
Vijay, I want to point out what Elon Musk was saying in the Oval Hands to his own staff at Tesla. He said, if you read the news, it feels like Armageddon. According to a podcast late Thursday, he referred to what's going on as a little bit of stormy weather. What he said was the point he's making is hang on to your stock. But if you're a Tesla employee, the stock is down 50% from its highs. You're looking at the other Elon Musk enterprises like SpaceX, the valuation has been soaring. Or even X, where the valuation is pretty much where it was when you bought it. It has risen back again. Then wouldn't you be a little frustrated that you're moving Tesla stock and not something else needs made?
Yeah, definitely, Sonali. I think
We are in a range from the opening bell here.
It's definitely not
Ranging day here.
I think
Look at that.
the pick up. There's a Class 1 Y version that could help drive some of the sales to the back half. But definitely there have been significant challenges, and it's definitely a little bit of a headwind tomorrow, and that does not help. But again, even when you look at some of the things that
We
they're
are
saying on the
unable
robotics side, you're not seeing NVIDIA talk about robotics as
to get back to yesterday's
industry,
lows.
that,
So we're below
talking and not,
yesterday's
the
lows,
big bellwethers in the tech market.
as well as the VWAP today. This is very bearish.
Obviously, the core EV business has not been good, as I mentioned, in US, Europe, and China, and so
President of the United States doing an infomercial, which is helpful for your product, and the Secretary giving investment advice.
See what
About a different company.
the bulls are trying to do here. Wow, look at that. Now there's a nice push. Trying to push through the VWAP.
Earnings and also being a decent out, yet the shares are down. Micron is doing
Wait a minute here.
Is this just a part of the broad?
I mean, since we could not, there's no conviction in
NVIDIA and down. And so I think some of it is that.
this might have been in
very well.
the inducement
For AI, the revenues are going 100% in the back half
from the
and
big
100%
boys.
year-on-year into 2026. So we think they are doing
Here.
very well on both HBM.
Let's see if we can stay up.
Margin side, margins being down a little bit here into the next quarter, but a lot of that.
Today. No news today. I was expecting a smoother. It was pretty smooth pre-opening. here. Nice shorting opportunity there. As prices fail to break past the pivot, price stayed below the daily pivot and just took out the lows of yesterday. Now the bulls are trying to reclaim today. So if we can displace through this buy side, that shows conviction. And when there's conviction, there's opportunity. Pardon me a minute. It's time for the coffee refill. And
funds get their largest weekly inflow of the year. We're going to take a look at that in today's strategy session next. This is Open Interest.
News whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Good Morning. Good morning. This is Bloomberg Surveillance.
see, where are we?
This is the Age of Trade. This is Wall Street Week. Welcome to Balance of Power. This is Bloomberg Television.
Look to be above VWAP.
From the beating heart of global
I will be looking
economics and politics, and wherever news makers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important. What do you think the future is for inflation? Is this new normal? Current citing completely
Way that's like opening presents in the
It will be exciting.
Nobody can news like Bloomberg.
Welcome back to Open Interest.
Oh,
We're giving you
wow.
a snapshot of what's moving
Man,
today
missed
in
this.
these markets. Almost a half hour into the session right now. We're looking at a lot of red here. The S&P 500 down 0.8%. The Nasdaq as well. We have the VIX up, so that's not an up arrow story, but there's an up arrow at 20, almost 21. The Dow Jones Industrial Average might be out with earnings that really disappointed.
I am watching this note from Bank of America because they're seeing that global equity funds and have a look. Equity funds globally have brought in $43.4 billion, which
Which is strange.
4.9 billion relatively bonds. Gold and
Our entry is way
China,
up here.
two top exporters
It's
to the
usually
US. They believe, according to this
right
Bank of America
my
note,
levels.
that the reason they rallied is that investors are
Check this.
skeptical that U.S. tariffs will cause a recession.
Yeah, absolutely. It's incredible. But here in the U.S., retail investors have poured $12 billion into equities as well. So they're buying as an institution sell. Coming up the next hour, Ann Barry joins us and Mike Matthews.
My stop loss should be 133 ticks. It's not this much. Yeah, so. Close range here, and that's
fantastic opportunity to buy
600 points.
and the network. When you click on Greyhound,
600
that
points.
comes from network management, revenue management. We saw the highest unit rates in more than 100 years of Greyhound history.
My vision is to transform long distance bus travel in the United States and make it one of the top considerations for anyone
planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think of infrastructure, in the United States holistic, and think about the transportation system as one integrated system. An intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Austin South Station, or New York Corridor Tourist Terminal, or Washington D.C. Union Station.
Teil the team that the fantastic job. They have really improved the product, they have improved the they have really made the production more efficient, but at the moment it's also profitably growing business.
Bloomberg has the Fed decision under surveillance. Nobody covers the Fed like Bloomberg. U.S. jobs numbers are released. Bloomberg
Yeah, perhaps
has the
it,
report under surveillance with crucial data and expert
didn't,
analysis at terminal speed. Nobody covers jobs day like
on my
Bloomberg.
entry here, the stop loss was not correctly modified. Maybe it wasn't checked. That's what ended up. I mean, there's no way that for 4 contracts, such a premium on that purchase price. That's you've got a hill to climb today.
One of the busiest airports in Europe is
I believe we
impacting
can
travel around
get
the
there.
world. CBS's Yanley is in London with the latest on the shutdown at Heathrow.
120 planes already in the air turned around while others closer to London were diverted to nearby European cities.
We need to
Airlines have canceled
once we
around
clear
500 flights.
once we can clear the
Officials are now
the
looking into the
yesterday's lows range here, this range.
back off the
We
ground
clear this
as
and
early as tomorrow.
The airport says it doesn't know when power will
Just
be
be
restored
managing
and
the
expects
position.
disruptions for at least a few days. A Southwest Airlines plane got stopped just before taking off from Orlando because it wasn't on the runway yet.
3278 stop. Southwest 3278 stop. Kansas City clear. You're on Hotel Taxiway, Southwest 3278.
That's from liveatc.net. The crew apparently mistook the taxiway for the runway, and air traffic control canceled their clearance. CBS News has obtained a list of Venezuelan men recently deported to El Salvador. Immigration and politics reporter Camilo Montoyo Galvez.
Some of these men do have criminal records in the U.S. or in other countries, but many, according to the administration, do not. The administration is accusing all of them of being part of this transnational criminal gang known as Tren de Agua, but that is an accusation that is being disputed by their lawyers and their relatives.
The administration has said it carefully vetted each of them to verify their connections to the gang. The wife of Mahmoud Khalil recounted the moment federal agents raided their apartment in New Jersey. Noor Abdullah told CBS Sunday Morning,
"My husband was taken away from me when I
should have taken partials there.
It was one of the most terrifying times of my life. I don't think I've ever experienced anything scarier than that."
They allege he spread Hamas propaganda during anti-Israel protests at Columbia University last year. Israel's top court is ordering a halt to the prime minister's firing of the head of an international security service. CBS's Remy Inocencio tells us Ronan Barr
was leading a high-profile corruption probe into Netanyahu.
Ended up with a loss on that.
Directly into his office. Critics of Netanyahu said he's disrupting his own city,
We'll
firing the chief, and then trying to
we'll try for another entry here. But
Pittsburgh Pirates pitcher Paul Steen's rookie card just sold for over $1 million.
7 up, 7 down, all via the strikeout for Skeens.
The card contains the MLB debut patch from his uniform and also his
entry
autograph.
gets in the
Looks like
correct
stocks are doing that wobble baby
position.
wobble dance right now, all in the red. The Dow down 436 points.
Big rejection.
This is CBS News.
Big rejection at the. We have displaced this, so she's going back up here. Wait for another entry here. Microunits.
An early Christmas miracle.
Changes.
A judge in Los Angeles has tossed out a $20 million copyright lawsuit filed by two songwriters from the South, claiming Mariah Carey copied melodies, lyrics, and
If I put 133 ticks stop loss, it should say my stop loss should be $266, but when I entered it, it was at $400. So I need to figure that. We might take partials once it hits back up here, just so that we can cover our previous losses.
For Washington Caps Alex Ovechkin on the NHL Network.
Position here.
He is now 7 goals away from breaking Wayne Gretzky's career goal record. Stacey Lynn, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real
Back up above. We can get back up above the
Or the companies lean enough that they trimmed all the fat.
today's low
business is a
range.
really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, YouTube.com/Bloomberg Podcast Live, and that's where you'll find us. A lot of news going on, a lot of news in the markets. We'll have it all for you. We're going to lead off Benedict Cummings. Bloomberg Global Aviation Analyst, this latest reporting out of Heathrow. The airport closed down at 50% 40 today, so the disruptions across Europe, across the world are just huge in terms of air travel, but the latest there. Dylan Boyle, a senior U.S. e-commerce analyst for Bloomberg Intelligence, gives us the latest coming out on Nike. Look at this plenty there. Clear out a lot of inventory. Simone Foxman, reporter for Bloomberg News Equality Team, to discuss the future for Weekend Edition, discussing what went wrong for DEI. That is the question. So the detailed reporting there. So a lot coming up in this hour.
And this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries at moment at your timetable. Learn more at IBKR.com. And right now, the S&P 49 points lower, down 0.9%, 56.13. The Dow Jones Industrial Average is down 66 points. The NASDAQ 100 down 159 points, goes down about 0.8%. So a sell-off in several of the tech mega caps, driving the NASDAQ 100 to its longest streak of weekly losses since May of 2022. Also, some weak forecasts weighing on the stocks.
Here we go.
In detail,
Looking for partials here.
For your guidance for a third consecutive quarter. Adjusted earnings now expected to be in the range of $18 to $18.60 a share. And FedEx, which you could consider to be something of a global bellwether, because it operates all over the world, right now down.
We took out one micro.
And then
profit on one micro, so that should.
just stumbled.
Really?
In revenue and
I get it
profitability.
much on.
They're trying to clear out some of the old inventory through
That makes no
discounts
sense.
as well. And shares of Linky right now down 7 and.
I'm going to take out another partial.
Target cutting bonuses for salaried employees to 87% of their eligible 2024 bonuses, and they're blaming softer consumer spending and decreased sales and profit. Now here's the
Let's see how much we can get off of that. Wow. This is just.
down right now 2.1%. The owners of
I don't understand what's going on with these contract sizes. Never had this issue before.
Did they take it?
I think they got back to us and said it's really not big enough.
I'm just gonna manage my position here, and we'll take the loss today. Then
We check the markets view.
we can't continue higher.
Hi, good morning. Happy Friday.
We made it.
We made it. Those traveling to and from London have not made it. What an amazing array of headlines out of Heathrow. Suffering its worst disruption in at least 2 decades.
Oh my
Nearby
goodness.
fire cut that power, causing hundreds of thousands of passengers to be stranded. There's really not a lot of good news when it comes to these headlines. I wanted to get more on this
Adjust
with Benny
these
Campbell,
units.
Bloomberg Global Aviation editor. Benny, can you just put this into perspective for us? Like, it's bad enough that hundreds of thousands of people are stranded, but getting these up and running after this might also be just as big of a nightmare.
Yeah, you're absolutely right. And I haven't seen a shutdown of an airport on this kind of scale. We've had disruptions at Heathrow and other airports before. You know, it might be weather related, wind, ice, heavy rain, whatever it might be. There have been strikes, there have been shutdowns because of air traffic control. But something on this scale, I have to say, is unprecedented. We had, you know,
Oh, it's because I didn't
attacks,
check mark the
again,
take profit.
that
That was
disrupted
probably why,
operations,
yes.
not to this degree. So the airport to properly shut down for the duration of the entire
Try
day.
one more
Other flights,
here. See if
I've
we
never
can
seen that before. Guy Johnson from Bloomberg TV on the ground, an eerie silence in the skies. Normally you'd have a lot of planes taking off and landing, and we were talking
get a
about
limit order
200,000
set here.
passengers here who would normally sort of cycle through this airport, and you know, absolutely nothing going on today, all because of a fire that happened at a substation about 2 miles away.
And Benedict, I think like a lot of people, I was shocked to learn there's no redundancy, no backup power system for this airport. What do you know about that?
Well, you know, the aviation industry is sort of built around redundancies, built around the whole concept of safety. If something pops out, something else kicks in. What we do need to remember is that Heathrow isn't just an airport; it's essentially a city, and you know it requires the energy consumption of a small city. So to have a backup for that kind of an operation is difficult. So what they do have, obviously, is generators, is some sort of power backup, but that is really used to sort of keep the airport on life support, shall we say, but not really to run it at full capacity. So they've kept the lights on, but and it's sort of used for emergency procedures. That means getting things down if you have to, maybe you know, just sort of the bare bones operations. But for a power station like this to go down, that really has disrupted operations, and they didn't have the backup for that.
When it comes to the airlines, what did they do? Like for all these passengers that need to be rebooked and rescheduled, what's their process for that?
Well, there are sort of different
Well,
sort of
we seem to be having some technical issues with our
arrive at the airport and
entries here.
Super annoying, but
I mean, usually I don't.
go back home and wait for the next day. Then there are those who were already in the
I
air.
have no idea
and the
what's going on
planes
here.
so far
I usually don't even have to put a take profit and just
those are really unlucky.
set up my take profit later.
Some of them landed in Brussels, some of them landed in Frankfurt, some of them landed in Birmingham. The really lucky ones landed at London Gatwick, which is around the corner. But a lot of people landed at airports that are really far flung. And then there were people who flew in the middle of the night and the plane turned back, and they might not even have noticed. There were sort of
So at least my stop loss is
fell asleep in the
more
middle of the
accurate
night,
now.
and they wash it into Heathrow. They wake up in the
Well,
morning.
not really.
It's
It's supposed to be
it's
130 tick stop loss is supposed to be $200 unit. Yes, but it's only $132 here.
Don't just wait. It's going to take another day.
I might have to just
and even then,
change
it's going to
brokers.
take a while for the system to sort of creep back to life, because a lot of planes are out of positions, crew are out of position. So that usually takes a couple of days, maybe even into next week, for things to go back to normal.
All right, Benny Campbell, thank you so much. We really appreciate it. Benny Campbell joining us, Bloomberg Global Aviation Editor. Let's take a look now at some stocks on the move today. We are joined now by Denisa Sakova, Bloomberg Cross Asset Reporter. Denisa, it's hard to talk about these stocks without talking about Nike.
Let's start with Nike. I feel so we've talked a lot about them in the last few months, and most of it has been positive stuff. This time we're actually seeing their big comeback being threatened. We're seeing a lot of issues in terms of clearing out old inventory, growing trade war, and of course,
So we can get back to
consumer. So all these forces have pushed Nike down 9%.
To this range here.
Take a partial. We're looking at 13%, so it's a pretty rough start of the year. Of course, this comes after a big turnaround effort. We saw their the new chief executive officer, Elliot Hill, coming out of retirement to work on this. He's a long time Nike employee that has a great reputation, and there will be so many new initiatives. We're talking about the Skims partnership, we're talking about the Super Bowl commercial, and all of those things indeed like brought optimism and help. But it
It's the
seems like when it
micros,
comes to earnings, investors are still not impressed by the company's turnaround and are waiting to see actual number. So, of course, the weaker consumer and fallout from the escalating trade war are really complicating this.
And we're going to be speaking just a moment with Quinn Boyle, the retail analyst.
Oh, wow.
Just maybe shove some more analysis. What
Nice
was
push
it
up.
already said? What was
Can we?
Rotate at the same time. All right, FedEx.
Another rejection.
Yes, again, going back to the
Another
weakening
rejection
consumer trade war, I feel as though that's something that comes up on all earnings reports.
a strong one.
FedEx is the latest company to sound alarm on that, especially the escalating trade war. Shares tumbled more than 11%. The company lowered its full-year guidance for third consecutive quarter. They're citing inflation, uncertain demand for shipments. And if you look at the chart, year-to-date loss is more than 20%. So again, another company that's having a very rough start of the year. Adjusted earnings are projected in the range of $18 to $18.60, below the average of $18.95. That's what analysts estimated. The company has obviously a big exposure to a lot of things in the global economy. So you can imagine trade war is particularly difficult to navigate for a company like this. And they even said that their outlook assumes the global economic trade environment doesn't worsen any further. We obviously don't have a lot of guarantee on that. So not too much optimism on the stock at the moment.
We'll have Lee Klaskow, Bloomberg Intelligence transportation analyst, and his cynicism will accompany him talking about how we use FedEx.
Well teased.
is great.
Yes.
Well teased. Well teased. What about Luminar? Yes, I wanted to bring some good news in the end. The company is seeing a big spike today, more than 20%. The maker of sensor of autonomous vehicles, obviously a very niche thing that's trendy and doing very well. It's posted 4-quarter earnings at top estimate. And company is up 44% year to date. Really good start of the year, considering how volatile markets have been. They included guidance for revenue growth that's as much as 20%. We saw that the company is still feeling the pressure because it has exports from Mexico, which obviously are impacted by the trade war. But we're seeing optimism among analysts. Deutsche Bank upgraded their target and are implying 11% increase here. The company actually develops that technology that helps self-driving cars and especially when they're turning and parking, and it helps the autonomy to really provide that reliable situational awareness. So it's a very important thing. They work with Mercedes, Volvo, and all those big brands. So they're doing well. All right, something good there in that list. All right, Denisa, thanks a lot. Denisa Sakova, a Bloomberg Cross Asset Reporter, joining us. And as Paul has been teasing, Quinn Boyle, Senior U.S. E-commerce and Retail Analyst, will be joining us to recap those Nike earnings. Plus, Hassan Najee is CEO of Markets and Millage Chat to discuss the latest in commercial real estate. We're at the bottom. Where are we now? I guess that's really the question as we hit on this Friday. It's pretty ugly out there for some of these stocks. Also, the S&P is still down by about 0.9%. This tech can't seem to get a bit either, off by about 0.8%. I know, the triple witching is a thing right around the close and the open. It's a Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Nation with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st. We'll see if your company qualifies at oracle.com/Bloomberg. Right now, all 11 major industry groups in the S&P 500 are lower. NVIDIA, among the most actively traded right now, shares of the NVIDIA, they are down 1.7%. NVIDIA stock down almost 14% year to date. The stock's 50-day moving average fell below its 200-day moving average, forming a bearish cross pattern, which occurred in April of 2022, the last time. That was followed by a 30% decline in the shares over the next 2 months. Nike, also among the most actively traded, the company settling further declines in revenue and profitability. They're also trying to clear out old inventory through heavy discounting. Right now, shares of Nike, they are down 7%. And after its earnings, FedEx shares again down 10.5%. Now, overall, the S&P 500 extends its declines down 41 points. That's down 0.7%. Dow Jones Industrial Average down 383 points. That is down 0.9%. The Nasdaq 100, 120 points lower, and that's down 0.6%. And we check the markets for you all day long. Like you know, John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele. You can stream live in our Bloomberg Interactive Book Studio. We are streaming live on YouTube, so head over to Bloomberg. I head over to youtube.com. So Bloomberg Podcast Live, that's where you'll find us. As John was just reporting, some disappointing numbers out of Nike, out of FedEx. And I'm going to approach the analysts we have from BI kind of the same way in my questioning. Let's start with Poonam Goyal, senior U.S. retail and e-commerce analyst. And we'll start with the Nike. And Poonam, the question I have for you is kind of the same one I'm going to have for Lee Klaskow about FedEx. And how much of the kind of the weaker than expected results was company specific, i.e. not executing well, versus maybe just a weakening consumer out there? How does it apply to Nike?
So Nike was all company specific. And I would say that, a lot of this we expected. Nike's results will stay weak until they get their inventory realigned with sales. And that's not going to happen overnight. It will take at least 2 to 3 quarters at the minimum. So we do have some downside or some weak results for the next few quarters. But I will say that they are making the right moves. The new CEO, Elliot Hill, has a plan that we think will work. It will drive Nike back to be the lead and get the mind share that it has held for so many decades.
In that case, have we seen the bottom in the stock price?
Well, the shares have clearly come off from their highs and they're down again today, 7%. I'd say the bad news is out. So from here, they should continue to realign inventory. This upcoming quarters of theirs is when they'll probably make the biggest push, and we should hopefully see inventory begin to normalize for the next 2 to 3 quarters.
Compared to their competitors, this inventory issue is, I would argue, mismanagement of inventory, it feels to me. Is it materially different than its competitors?
Yeah, absolutely. This is a Nike specific issue. So what happened here is that Nike has a lot of classic inventory that just isn't resonating with customers, and therefore they have to find ways to clear that, but still do through their outlets and the value wholesale channels. The other competitors we're talking about, Adidas, Puma, others, they don't have this issue because they have the right inventory for the most part in place, and therefore they will not have as many discounts as Nike will have over the coming 3 to 9 months.
At the same time, though, they talk about gross margins being also impacted by tariffs, and that would be an industry issue, right?
The tariffs is an industry issue, but the decline that they guided to, the 400 to 500 basis point decline in fiscal fourth quarter, the bulk of it is due to the markdowns that they will face as they clear this unwanted inventory. So tariffs does have an impact. It's a very small part of that market compression that they're forecasting.
So how did the company get in this position where they had this inventory that wasn't resonating with customers? Because I think that Nike is like really on top of knowing what the customers want and delivering some really cool products. What happened?
I think this all happened with the previous leadership when John Donahoe came on board right around the pandemic, and he had a strategy to go digital. So essentially pulling out of many wholesale channels in a meaningful way, where Nike was really focused on driving growth in digital. The product was changing, but it wasn't changing enough. You saw, for example, they used a shoe and they just rolled out multiple colorways in it. There wasn't as much innovation as what the consumer is used to from Nike. So it was execution, it was just not having the right product, and I think they're back on their game now. They have a leader at home that knows the product, that was a merchant. So they do have some work to do, but I think they're moving in the right direction.
Who took their share while they were stumbling? Can they get it back?
Everyone. The Hokas, Adidas, you name it. I mean, when I went to a Foot Locker, let's say 7 years ago, it was largely Nike. Today, when I walk into a Foot Locker, I see everything in there. I see Nike, I see Nike, I see Hoka. So everyone took a little bit.
Yeah, Hoka's I think where they came from, but see all the kids around here wearing them.
And the adults too are starting to wear them.
Well, they're adults, but their kids can wear them.
But even like
And they're wearing them to work, by the way.
The older kids are still wearing
Are they?
Yeah, this is not just like a 25-year-old thing.
Okay.
This is the broader. I think that David Weston is wearing.
That was so disappointing to me.
I don't know if that's 100% true. I could be spitting false rumors, but it could be true. All right, Poon, thanks a lot. Really appreciate it. Poon Boyle, Senior U.S. E-commerce and Retail Analyst at Bloomberg
You should be able to take partials.
You're all going to get this rate cutting cycle, and it's going to be really great for commercial real estate, and everything's going to level out and stabilize. Well, that seems to be definitely put on pause. Add in the economic uncertainty and raise a lot of questions as to what happens to that sector. And Hassan Najee is CEO of Marcus Millichap. They are a commercial real estate firm. They're based in California, but he's here in the studio. A lot of economic uncertainty and the Fed on pause. What does that mean for CRE?
Good morning. Great to be with you. Thanks for having me back. It means the fundamentals are very well intact. It means the enthusiasm that we saw
another rejection
because of the election outcome being favorable to economic growth and especially real estate tax treatment with the 2017 Tax Reduction and Jobs Act more likely to be extended. It's still there, but you're absolutely right. In the near term, we've seen a lot of our clients just pause for a minute to see what happens with tariffs, to see what happens with the economy. The slowdown is now beginning to sound more like potential recession, although the data doesn't quite support that just yet. But there is more near-term concern. Once the dust settles with all of these kind of a week-to-week disruptions and the headlines and so on, I think those are positive fundamentals and the essential enthusiasm that our clients feel will come back into the market.
The lending market for commercial real estate today. If I want to go build a multi, apartment building in Middletown, America, will my local bank lend to me, or do I have to go to alternative sources?
It depends very much by the project. So if we're talking about construction financing, that is the most difficult to get right now, because there is so much more caution by lenders than we've seen in normal times. However, on the flip side of it, there's way too much worry about distress sales and distress becoming contagion and banks having to mark down lots of portfolios. Have not seen it because of the fundamentals being healthy and lenders not being motivated by market and dumping a bunch of product at a big discount. And you have to remember, commercial real estate is vast. It's not just office space, it's retail, it's apartments, it's self-storage units.
Well, let's talk about the apartment part because in terms of building new supply, talk about uncertainty. It's a labor issue, it's a lumber issue, it's a steel issue, it's a supply issue. I mean, that is material risk for that sector.
Very much so, but any more constraint on new development is actually positive for the industry because we've been building a lot of apartments over the last few years. Before all of this tariff talk, saw a 50 to 70% decline in permits and new construction starts in the last, let's say, 6 months or so, which is very positive for the industry because there was some overbuilding going on in the back 5 or 6 metros. On the office front, I have to say, especially here in New York, most of your audience probably is unaware that the office market is actually coming back. It's a lot faster than people would have expected. Just here in New York, the second half of 2024 showed the most absorption of office space we've seen since the pandemic recovered. Actually, about 8 million square feet between downtown and midtown Manhattan were absorbed in the second half of 2024. This is down more than a full percentage point. Because companies are making such a push to bring people back and the economy still expanding.
Have we seen any real distressed sales in New York or Boston or San Francisco, a building that we all know, and oh boy, it just sold at 50 cents on the dollar? I haven't seen too many of those stories.
Just to point out, he really wants to see these stories.
I want to take partials.
For me, will be.
You've asked me about that before. Sure, there have been, but it's limited to obsolete older office space, usually in urban markets, that cannot be reused. Anything that has a chance of re-tenanting, being renovated, is not in the category of bargain basement pricing. It's only the true obsolete office product that we've seen. Some older shopping centers too, but not.
I get picture like real estate friends. New fun going out to the close to the bottom here. I'm not getting anything because I'm not sure.
Okay, take partials there. And now, wrapping up.
I know, and then
It's a good opportunity, and this all of a sudden just never seems to materialize. It's that one-off.
Yeah, I'll have to tell you, opportunity funds.
Manage this position.
In the last 2-3 years in anticipation of this big buy.
Let's see.
There's situational distress, but there's no systemic distress.
Check something here.
You had those funds ready to go for the turn, and nope, there's that distressed that turn. Regionally, where do you guys operate?
But the growth markets such as Texas, Arizona,
We're good.
Georgia,
Good.
Atlanta yesterday, we
We're
had a
good.
presentation to about 400 of our clients in that market. Those continue to lead in demographics and job creation. I think California is getting a bad rap, and it's a diamond in the rough. A lot of those real estate prices have adjusted.
Suggest their profit.
Replacement costs. It makes this window of time a very attractive one to get into real estate if you can stop
This level.
near term, uncertainty around interest rates and so on. And you're seeing the record capital on the sideline.
Now we're just managing the position. We pretty much guarantee ourselves. Price decides to come back to this low, to swing back at the lows there from yesterday's lows, which is good. Either way, we're good. But yeah, I will have to figure out what's going on with the numbers here from these entries.
So I'm seeing how this plays out.
Usually it does.
Down 48 points on the S&P 500. It's at 7/10
It does.
1%. The Nasdaq's off about 100.
The entries are usually pretty tight, right?
1% here. Looking at the
Whether it is limit or market
10-year treasury
order.
just a little bit, 4.22%. Oil, pretty steady here, $68 a barrel.
So it goes from here,
Just slightly about 84.
from the opening low,
Put a token on that. I'm looking at the Bloomberg Dollar Index. Stronger.
unable to displace
Euro
that.
is at 1.08. Not at the
And that's how we went bullish. We did some swings here because we already displaced through this. Displaced through some swings before we continue here, but it's okay. We're all good now. despite our losses from the first initial couple of entries, and that was due to technical issues with the order book, we're back in the green now. Took partials and we're back up. And if we can reach this high, that will be a nice bonus. That is our draw on liquidity. At these highs, let's see. Possibly there. There's another high here. This is back in it's back from London. The London highs. Yeah, I'm not sure how the stop loss order was executed there. Since
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash. And I'm John Temple, the Bloomberg Nation with this Bloomberg Business Flash, brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. is for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. S&P 500 right now on track for its fifth consecutive week of declines, and setting the tone for the markets. The forecast from companies like FedEx to Nike, Micron Technology, and Lennar, all disappointing investors. Worst performing stock right now in the S&P 500. That belongs to FedEx. They lowered their full year guidance for the third consecutive quarter, and shares of FedEx right now are down 9.2%. Micron shares, they're down 7.4%. Then you have Nike shares down 6.6%. Lennar shares down close to 6%. In fact, there's only one of the 11 major industry groups in the S&P 500 that's higher right now. That belongs to communication services, and that's where you can find shares of AT&T. BT Group has approached major telecom companies about possible partnerships. And the S&P 500, 42 points lower. That is down 0.75% right now, 56.20 on the index. The Dow Jones Industrial Average is down 352 points. The Nasdaq 100 down 150 points. And that is down 0.8%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and at your Bloomberg Business Flash.
All right, thanks so much, John Tucker. Alex Stephen here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. We also tap our amazing resources from our reporters also all around the world. And one of them now is Simone Foxman. She's a reporter for Bloomberg News, a quality team. Apparently, we have weekend essays. I didn't know that we had that, but we do. And Simone has the most recent Bloomberg essay. No, but it's a really long, in-depth piece. That's not necessarily like a businessy big take, but a financial, this is what you need to know if you need to understand this industry. And this has to do with the overpromising and under-delivering of DEI. It's an impressive piece, Simone. Paul's been waiting for this for a while, like I said to you during commercial break. Set the scene for us. Where was 2020 in DEI, and then where is it now?
Well, DEI existed long before 2020. Sometimes in that specific acronym, or diversity, equity, and inclusion. In fact, it goes back as far as the 1960s, and then sort of evolved slowly over time. But as you know, beginning in like the 1980s, you really had businesses making the for diversity programs, even pushing back against Ronald Reagan when he tried to
volume in this
executive orders.
Continue up.
And of course, it's evolved over that period of time. It hasn't worked particularly well, especially when elevating Black people in the workplace. But something seemed to really change in 2020, and frankly, it was the language around which corporate executives talked about it. They adopted a little bit more, I guess radical is the right word, language. Very informed by scholarship, very interesting, very much what people wanted to hear, but it really changed also the reception of DEI in the workplace and beyond, and maybe helped create some of the conditions that we're seeing today that come back.
Well, President Trump, I'm just reading your note here, just weeks into his second term, President Donald Trump has delivered DEI audit bill. And you say some real big companies are black.
Yeah, looks like we're going to try to go back up to reach the daily pivot.
And you know what Disney company ended one of its flagship programs. So we're seeing real, I guess, change. And is this for real this time? How does it feel?
Well, certainly some of these things, and I would note that some of these companies in specific have scrapped specific measures that might be risky under the law, considering what they see coming down from the Trump administration. We actually had news this morning that JP Morgan has renamed its DEI program DOI. That is diversity, opportunity, and inclusion. Whether the motive is eliminating confusion, or it's simply to conform to what the Trump administration seems to want, a little unclear at this moment. But the fact of the matter is that many companies are continuing to preserve things that have, at least for the last couple of years, fallen under the DEI bucket. Those are things like maternity and paternity leave, mentorship programs, internship programs, but they're eliminating some others. And it remains to be seen
No.
what will be acceptable.
We'll call that we'll call it a day.
When this is going to follow the Trump administration.
You got some gains to close the week out, so
And we should point out that change
expecting price to maybe consolidate a bit more before. Well, look at that push. Oh, yeah, the jaw is up back to more bullish to reach the dirty pivot.
It went more from diversity and inclusion within a company to those companies that one company does business with. Like if you don't have
happy trading and have a good weekend.
Can we separate that?
See you next week.
From
Cheers.
DEI? Some of those things existed before. For example, supplier diversity, nation